So 100% mortgages are back. Yes, your eyes are not deceiving you. I said that. You can now borrow the full value of the property that you want to buy for the first time since 2008. But before you all rush off to Rightmove, there's one or two things that you need to know about it. So stay tuned. I'm going to tell you everything you need. So hey everyone, welcome back to the channel. My name's Adam. I'm an expert mortgage broker. Today we're talking 100% mortgages, the return of. So it's exciting news, big news, first time since 2008 that you've been able to borrow the full value of the property. There have been one or two other schemes that have kind of suggested 100% lending, but there's always been something else in the background where you've needed like family members to put in or deposit some money with a building society or something like that, where there's extra sort of help needed and it's not quite fully just 100% lending, whereas this actually is. So I'm going to tell you all about it. Don't forget to give us a thumbs up, subscribe to the channel. We do content like this all the time, so give us a thumbs up, subscribe, and then you won't miss the next one. Okay, so this is big news. This is a big risk for a mortgage lender. The mortgage lender is Skipton Building Society, by the way. I don't know if you can go direct to Skipton or not, whether you have to go through an intermediary. I would say go through a broker because it's always better anyway. But yeah, I don't know if you have to or not, whether you can get it direct. But it's a big risk for Skipton Building Society to take, because 100% mortgage, you know, if you don't pay the mortgage and they have to repossess you, if house prices are fluctuating a little bit, if house prices go down, it's a big risk for them that they won't get their money back. So this is a big deal. This is why we haven't seen these for a long time, because, you know, what happened in 2008, 2009, if you can remember that far back, house prices crashed and lenders that used to lend 100% or more in some cases, you know, lost a lot of money because the house wasn't worth what the mortgage was. So they repossessed and then they couldn't get their money back. So that's, you know why we don't see these anymore, haven't done for a long time. So this is big news. So there's a few bits of criteria that we need to hit, a few boxes we need to tick to make sure that we can get this 100% mortgage. So first of all, you need to be first time buyers. So if there's two of you, let's just assume there's two of you, I normally do, then you both must be first time buyers. One of you can't have owned a property before. Now also, whilst we're calling it 100% mortgage, you don't have to borrow 100%. If you've got a little bit of deposit, that will be good as well, because it will reduce the amount of money that you need to borrow. So, you know, the more you can put in, the better. But you can't put in any more than 5%, because if you put in more than 5%, then you qualify for other products anyway, so you don't need this one. Now, this is a big one. This comes back to that risk element that I talked about a minute ago. You've got to have a nice clean credit history, so you can't have any missed or late payments in the last 6 months at least. But their credit scoring, I would imagine, they don't publish this, none of them do, but I would imagine to get this type of borrowing, we're going to need to have really squeaky clean credit history. So, you know, missed and late payments, credit problems in the past and things, they are probably not going to put you in the best position to be able to get this particular mortgage. You never know, the criteria only states 6 months, but you know, you would imagine that you're going to have to be fairly good credit history to get this mortgage. So the purpose of this mortgage is all about evidencing that you can afford it, and so we do that to enable them to, you know, give us the full property value. We need to evidence that we can afford it, and we do that by showing that we've been paying rent. So this is the big one. You must have been renting for at least 12 consecutive months, and we have to show evidence that you've been paying your rent for 12 months, and that could be from bank statements or you know, a statement from the letting agent. Sometimes letting agents take cash, probably not very often, not seen that for a long time, but either way, we need to be able to prove that we've been paying that rent, and if we can do that, then we qualify. Now, it needs to be 12 consecutive months within the last 18 months. So if you've rented for 12 months, but then maybe you've moved back into family like 2 months ago, that's okay, as long as we can show that track history. So we need like 12 months bank statements or that history from the letting agent to be able to do that. And so it doesn't matter that you maybe don't rent now, if you've moved back into family or something else, as long as you've done it for 12 months within the last 18, then you're going to be okay. You also need to be able to show that you can run a household. So as well as paying the rent, you need to be able to show that you've been paying all the bills. So you've been paying your council tax and your gas and electric and your water and all those sorts of things. That might not be monthly, it might be quarterly or annually or whatever, but you need to be able to show that you've paid those bills as well. So they're going to go through your bank statements and just check that you're used to paying all the household expenditure. Now that can be jointly between you. So, if one of you pays the rent and one of you pays all the bills, that's fine. Between you, then that's going to be okay. But it does need to be the same people. So you can't say, well, I've been paying the rent on this property with a friend, but my partner's been paying the bills in this property but hasn't been paying any rent. Just from reading the criteria, I don't think that's going to be okay. I think it needs to be that you've been renting together and you've been paying the bills for 12 months. Now, the other key bit of criteria is that the mortgage payment can't be any higher than the average of your last 6 months' rent. So if you've been paying £1,000 a month rent for the last 6 months, your new mortgage payment can't be any more than £1,000. So that might limit your affordability. Hopefully not too much, and the more rent you've been paying, the more you'll be able to borrow. But that's a good way really of showing affordability, because you've been paying that rent and you've been paying household bills, so in theory you should be able to cope with that much mortgage payment. That's why they ask for that track history. But you can't say, well, I've been paying £800 a month, but now I've had a pay rise and I want to pay £1,200 a month mortgage. This one doesn't work like that. It's got to be the same or less than the rent that you've been paying. A few other little housekeeping bits. So maximum loan is 600,000. So that's going to cater for most parts of the UK. Deepest London, that might not be quite enough, but for the majority of people, that's going to be okay. Maximum term, 35 years. Affordability. So there's affordability on the one hand, what we just talked about with it not being any more than your rent, but then affordability as well, it's up to 4.49, so about 4.5 times your income. Now you need to speak to a broker or speak to Skipton about how they look at your income. So if you get paid a basic salary and then you get overtime bonus, commission, that sort of thing, they might look at that a little bit differently. If you've got loans, credit cards, children, childcare, that sort of stuff, which if you've seen any of my other videos, that detracts from your affordability a lot of the time. That might mean that you can't necessarily borrow 4.49 times your income. So if those other factors limit you in any way, that's the amount you can borrow. So you can't just automatically borrow 4.49 times your income. If you've only got, say, you've only got 20 years to retirement, for example, your monthly payments would be quite a lot higher than if you've got 35 years until you retire. And so your mortgage payment would naturally be higher, where that's going to really limit your affordability. So because we're trying to cram a mortgage into a shorter period of time. Now, for the majority of people that this is aimed at, that's not going to be an issue, but it is those kind of two factors that go together to work out how much you can borrow. So there's two elements of the calculation we use, and we've got access to both of those calculators with Skipton, so we can work out fairly quickly what you can borrow based on the rent you've been paying and your affordability as well, and we join the two together, and then that's the amount you can borrow. Last but by no means least, this is also available on new build houses, which is remarkable really, because most lenders kind of reduce the amount they'll lend on a new build house. There's not many lenders with 5% deposit on a new build house. So to be able to borrow 100% of a new build house, because a new build house, when you move in, it's shiny and new, you tend to dip down in value before it goes up. So actually that's quite novel that we can do this on a new build house. You can't do it on a new build flat. So Skipton term new builds, anything that's built within the last 3 years. So anything that's less than 3 years old, you can't buy. So if you are looking at a house that someone has lived in, bought maybe a year ago and now they already want to move, that's a new build. So if that's a flat, that's not going to be suitable. If it's a house, it's okay. So that's really good news that it's available on new build houses too. So I've been talking really quickly. That's a whistle-stop tour of the new 100% deal. Hopefully it'll be around for some time. We don't know. It could be withdrawn any time. By the time this video goes out in a few days, it might already be gone. Let's hope not. Touch wood, it's not. If you've got any questions or you want to know more, you want to do those calculations to find out how much you can borrow, get in touch, drop me a comment, or there's links in the description to our website. You can book an appointment on there. You can book an appointment straight in our diary. Link in the description below. I will speak to you very soon. Take care.